Welcome to TradeNBA.com. This is John. This report is for the 13th of November. Well, Friday saw a massive turnaround off that 50%, and that was critical at this particular stage because as things were starting to fade off a little bit as we reached that 50%, we had the DOC spread, but that was an indication that midterm buyers and well, even the longer term money that we were looking to see where it was going to go and if it would move towards the market versus bonds. And sure enough, it did. And a lot of that was pretty clear when we had the failing of the treasuries because there just wasn't money going into there. So it was being kept as an allocation to buy right back into the market. And that's exactly where it all went. And does that pose longer term problems from a Fed standpoint in funding the massive deficits? Well, sure, but from a reading standpoint, it still keeps the magenta MBI well above the 33 as well as above MBI yellow. And you can see the short fade off was pretty dramatic within that. We also saw a turn of short-term buyers here on the DOC and the shakeout staying positive. So all of those things being congruent kept things pretty much in line. And we could see that from a NASDAQ standpoint, it was the key players, the big 7, 8 that really kept things moving because they all had strong performances and that really propelled things back up. And, a lot of it is world conditions, obviously, all the negative beliefs about where things were going with the Israeli conflict as well as Russia-Ukraine situation. All of the worst case scenarios haven't panned out and or even gotten close to developing that way. So a bit of a reprieve, and that was good enough for the market to really just allocate towards that. From a yield standpoint, pretty benign. I mean, it was a slight increase, but it's pretty well, fairly close to exactly where the Fed has rates. So the market, exuberance that rates were going to continue to rise. Now that doesn't mean that in the future they're not going to have to rise to bring people to buy the bonds in order because we're seeing a decline in foreign purchases. So who's going to fund that deficit? Well, obviously it's going to get just picked up by the Fed and spread out amongst the dealers. But overall, that potentially poses a liquidity issue where the Fed has to offer higher rates outside of where they're currently at. We'll see how that plays out. But for now, this was kind of an easy situation with oil having faded off as dramatically as it has recently. And the real question becomes, is that a demand drop off, particularly as we head into winter months where there's going to be an increased demand in heating oils and things like that. So we'll see how that impacts oil overall. But from a supply standpoint, that everything seems to be fairly benign as far as that goes. And that doesn't mean that there can't be an upset, but at this particular stage, a lot of the worst case stuff that they expected to have played out by now did not. And that's always a relief. From a euro standpoint, holding up pretty well, given the fact that things are going to start getting chillier in the European. Of course, their reserves of fuel in that are pretty well filled up and no major spike. And the decline in oil obviously supports the euro in that sense because they're not having to trade it for extra dollars to buy oil and supplies like that. So from a gold standpoint, without the fear issue fading off a little bit, the surprise interesting one, you can see this was building was the crypto space. Really lighting up is the ETF capability jumping in. And there's been no question about that from a DOC standpoint down back here at the 28 range where we got the buy configuration and the strong move on the DOC of green uh, over cyan and cyan dipping below the red, always a buy. Yes, always still in positive configuration, but positive extremes down here. Doesn't matter with that shakeout strength and the fact that you have this strong move of cyan under red, and it can stay this way for some period of time. It doesn't take much for it to even out, but pretty strong move. And interesting to see ETH outpace Bitcoin significantly, and that's just to catch up from a relative standpoint where it was. So that really starting to even things out a bit and giving an idea that crypto space live and still surviving at this particular stage now that a lot of the crises and other concerns. So, it's interesting as we head into the end of the year with that bullish push anyway. Um, you're seeing that a lot of the major concerns are just fading off a little bit. That doesn't mean they don't still exist. It's just they're not as pressing as they were just a couple of weeks ago, where things were getting a little bit of a concern. You can see it from a PK standpoint. Buy came in early with the crossover of MBM Magenta right down there at that 43.70 range, and I pushed it all the way up through to the 43.22, and a little bit of a ease back at this particular stage. The positive extremes from this standpoint don't go back that far, only to just around 4,400 range, which is modest at best. What we're looking at in the post market at this particular stage, a little bit of the fill back of some of the intraday positive extremes, nothing too dramatic, and we're seeing a build up here as the European session goes on. But if we go back to the day, you can see how it started out early on. There was a nice build, a little bit of a fade back that filled back in the positive extremes that were taking place at the early part of the day, and then literally once the morning started, it was just straight up. It's one of those where you just not a whole lot to do. You just go with it and sit back. So some of the weak hands will have been traded out of this, and we'll start it all up again in the new week. And as we get ready to head towards Thanksgiving, and that again, those without any news to drive things, still going to be an upward bias against probably a lot of what people think is the overall softening of things. But in the market's view, that softening just means the Fed has to take things easy, and from that viewpoint, that's a benefit. So you also gridlock in Congress, not a bad thing. It's always been a positive for the market. So that's the long and short of it for now. As always, though, anything relevant I will put up on our Skype chat. Have a good one. Talk to you later.